nobody's really figured it out. And probably nobody will. And you're sitting in the area that has the biggest experience asset, and we still haven't figured it out yet. And so the slides here, we're not going to talk about the numbers, but just to give you a little context as to, to show you kind of even in the area where we have the biggest experience asset, we can't figure it out, so imagine the rest. So, we'll skip quickly over that one. We've kind of stabilized the investment since the first bubble, broke, and this just wanted to show you where the U.S. Venture capital dollars are going. Most of them close to, I think last year was actually a little higher than that over the year, but close to half in California. So you're really sitting in an area where most of the experience, most of the funds, and most of the entrepreneurs are sitting disproportionately. The exits since 2000 have been predominantly M&A. There's been a little bit more of an IPO market lately. We expect a little bit and hope for a lot more, but exits have been an issue, and it's primarily been M&A. It's just, again, context for you guys. You probably know that. Europe has struggled and hasn't recovered from including the 2008 crisis as well as the US. It's important to know it continues to go down. There's fewer and fewer firms and fewer investments being made, regretfully, and even though you have firms here that deploy their capital internationally, we are a minority in this business still. Moving along. And so this is probably the most important one to just visually have in mind. Just a comparison between all of the U.S. venture capital investment versus Europe. To keep it in context also, and Don has some figures he's going to share, but U.S., this is across a population of about 300 million people. The European numbers you're seeing is across a population of about 400 million people, so it gives you another element of context. And imagine that half of the U.S. amount is in California, right? So you're really talking about a high concentration here and big Europe being far behind. Now, besides the number, what I want to emphasize here, and I'll close on that, is that the experience asset, the collective experience asset differential between these environments. Europe is far behind in terms of the ecosystem surrounding companies. Whether it's lawyers, recruiters, PR firms, employee experience themselves, management, and that's been really what's the biggest issue has been.
That's it?
I think so. Oh, and within Europe, just at a high level, UK and France tend to have the most vibrant venture activity. Germany right behind that, and then it's kind of spread out.
Great, thank you, Nicholas. And if we could get the other.
Yeah, I'm sure you didn't come here to see a lot of slides, so we'll keep this brief. But one of the topics we're going to talk about today is what kinds of investments we look for in different parts of the world. And I'm not sure if this is right, but this is my view of how venture capital investing evolves in a developing country. So in this pyramid slide here, you can see what I believe phase one is when you take a country like India or China, that initially what they have to sell to the world and export is low-cost labor. And so you see a lot of manufacturing take place, you see a lot of outsourcing of labor take place as you have in India and China. And that's usually the first phase. That's where venture capitalists put their money initially. It almost feels like early stage private equity. It's typically low tech, but that's the first phase. The second phase, once the economies start growing fast, they move into building out a consumer infrastructure. So there were venture investments in Brazil, for example, in an airline. In India and China, you see fast food restaurants and hotels. There are coffee chains. These are all investments made by U.S. venture capitalists. So that would be the consumer infrastructure. Then a fairly predictable pattern is you start to see clones of what's worked in the U.S., frankly. So there's a clone of eBay and a clone of Google and social networking sites in virtually every market. And that can be a very successful, if the region or market is big enough, that can be a very successful investment. So that would be phase 3, and DFJ has taken advantage of that by a decade ago funding the Google of China, Baidu. And fortunately, the population is such that in China, someday Baidu should be worth more than Google. Today Baidu is worth $40 billion, and it just keeps growing. That's a clone, and you see that literally across every country in Europe and around the world. And it's kind of the low-hanging fruit. If you're in early and you find something that works in the U.S., it typically works. It has to be localized, but it typically works locally. Then at the top of the pyramid is developing world-class technology, and that's what we try to invest in here in the U.S. Innovative new ideas, world-class technology that can be exported. And some countries do that on day one. Israel is an example of that. But China is starting to do that now. Several companies that are exporting their product, and the products are at world-class standard. Huawei in China started out in the low-cost labor category and then worked its way to the top, selling competitive products globally. These next slides, let's just skip through them. Because I kind of cited some of the examples. Why don't you flip through these and just go to the last slide. This slide, it's interesting. It puts in perspective where venture capital dollars are flowing around the globe. And you can see that in the year ending June 2010, that's where we had the data, there was $25 billion invested in the United States. And the chart you saw earlier showed that almost half of that was in California. So you can see the scale of activity locally. But so there's the United States, then Europe next. My data was a little bit different than yours. I think we show 5 billion. I think you showed 2.7 billion. But
no, actually, that was 1 point something as a quarter.
Oh, okay, as a quarter. So okay, it matches up. 5 billion over a year period. And then China. Everybody talks about investing in China, but it's still only 2.5 billion, 2.4 billion. Israel is next, and India. 1.3 billion people, only absorbing $1 billion a year in venture capital, and then Canada, and then Russia and Brazil are, I didn't have the exact data, but it's somewhere below $500 million a year. And so what this tells me is that there's huge opportunities. They're unmet. There are entrepreneurs with ideas that are not getting funded in these countries. If the bulk of the venture capital is hanging around Sand Hill Road, it needs to be spread out further around the globe. We are trying to do that. That's our strategy at DFJ. If you look at it on a per capita basis on the right side, it's even more extreme. I mean, in the United States, $81 is invested in venture capital for every person in the country, and in India, it's only $1. So it's a stark comparison, and shows you how much more capital can be absorbed by the creative population. And the amazing thing, 30 years ago, to start a company, you probably needed to start a factory. Today, the factory is the personal computer. And so it's very cheap, and they operate anywhere. They operate in your apartment or your attic, and or they operate in a coffee shop in the form of a laptop. So factories are everywhere, information is everywhere, and so there literally are no barriers to starting great companies anywhere in the world today. I mean, there are some obstacles, but there's nothing that can shut you down or stop you.
Great, thanks a lot, Don and Nicholas. So hopefully everybody can see sort of, it's fairly dramatically illustrated on both of the sets of slides that while sitting within a 60-mile radius of where we are right now, if I'm doing the math right, 25–30% of all the venture dollars being invested in the world is roughly showing up here. So there's a very significant amount of dollars that are being deployed here in this region. At the same time, as Don, you just mentioned, there are clearly lots of opportunity for venture investing elsewhere, because it is an underserved area of, from a geographic standpoint. All four of the panelists here, as we've talked about also, are investing both here in the US and outside, which is not the typical case, from my experience, of many of the venture funds that you can find here that are putting dollars to work here in the greater Bay Area. Yeah, so sort of with those two different touchstones, points to work from, I'd like to sort of get us into the discussion and sort of start with, given that all four of you are investing both here in the United States and are investing outside the United States, what you see as sort of the key differences for where you're investing, comparing, you know, as you see it, what you see that you're investing in here in the United States, and in particular here in the Bay Area, versus the geographic markets where you are investing elsewhere. And we have a mix of geographic markets, Europe, Israel, some small amount in South America, and then also in Asia. So let me sort of mix it up a little. I'll go to Don Butler at the end here, and let you sort of start off with what you're seeing.
I mean, here in, especially in this area, in the U.S., we really do focus on Silicon Valley, and there's so much going on these days in social and in a lot of the web technologies that's been our primary focus. To put it in contrast, you know, in China in particular, we still see, and we've done some software-related investments, but we also see a lot more going on in the chip and hardware industries out there. And we actually were part of a syndicate that funded a semiconductor memory company that was entirely here in Fremont, and it was extremely hard to get that company funded. In the end, it got funded and it's done well, but we found out afterwards that it was the first new semiconductor memory company funded on the West Coast in 22 months. And so basically, you know, what we find is you contrast that to sort of the greater Shanghai region, where there's about 400 semiconductor design houses. And so what we see is, in terms of differences between companies that we're funding over there and over here, is that in China, it's still, a lot of the innovation focuses on hard technologies, such as hardware or systems. And we haven't seen as many compelling early stage software companies that we wanted to do out there as we have here. Here we've seen companies that can very rapidly scale, and so much of the ecosystem, and especially the ecosystem we understand, is here. The one other thing I would say that's quite different for the China market versus the market here is that, as Don said earlier, a lot of the venture capital that is going into China actually looks more like private equity. And you know, hand in hand with that, if you were to look at the number of IPOs that are going on right now, China dominates the market for IPOs, but a lot of those companies are actually much bigger companies in all sorts of industries that sort of fit into that consumer infrastructure that you had on your slide. And so the types of things we're seeing here tend to be much more focused on software. The things that we see over in Asia are much more focused on hardware.
Richard, I'll toss the same question to you, and sort of compare what you're seeing here in the Bay Area versus what you're doing in Europe and Israel.
Sure. Yeah, I guess I'd say a few things. First of all, you know, if you're an entrepreneur here in the Bay Area, that's kind of the normative thing to be. Whereas if you come from Romania or Ireland or Denmark or somewhere else, it's going to be more unusual to be an entrepreneur. And therefore, I would argue, if you are an ambitious entrepreneur in one of those other countries, you're probably more for real than somebody here. Because here it's like the default thing to be. So you're going to be tough to be successful as an entrepreneur, okay? Secondly, I would say that there's way too much venture capital here. And there's a handful of funds that get all the hot deals, and all the rest of them are sheep. Okay, so everybody says, you know, one top firm says social networking's in, bam, you have 200 funds that are now doing social networking. But only the top handful of funds get the hot deals. If you don't get one of those top funds, let's say you move here from Romania to try and get funding here, then you kind of have a second or third or fourth tier fund. It's not necessarily going to make your future any easier unless you have some very exciting operating metrics to go raise the next round. If, on the other hand, you're an entrepreneur from some relatively obscure location, i.e. not Silicon Valley, and you manage to get a little bit of capital together, you have a much more unique, much more differentiated story. And if you can build the company a little bit with some local capital and then come here a little bit later on, you can get above the noise level and get some enthusiastic funding. I mean, as an example of the deals that we've done in Europe, that have attracted a total of maybe, I mean, we've probably put in maybe 100 million.